Hi, everybody. Ira Miller with the Ira Miller podcast. And today we have a special guest. We have Deva Anderson from Florida Best Quote Insurance. So I have been trying forever to get a person from an insurance company to come on and talk to us a little bit about some misconceptions about insurance and some insurance details. So we have Deva here, and we're going to go ahead and bring her on right now. And so,
hi
there we go.
there.
Welcome,
Thank you
Deva.
so much.
Thanks so much. Thanks for coming on
Absolutely.
and joining our podcast. So this is the first time that we have actually done a remote podcast, and so it seems like it's working out pretty good for us. And I have a list of questions, and then feel free, David, to jump in. And if you want to if you want to make any comments or suggestions,
Sure.
we'd love to have you do that. So once again, welcome. And so again, her name is Deva, but it's spelled Deva, right?
Yes.
And Deva Anderson. All right, so let's get started because there's a lot of things that I've been really been gathering some questions and stuff that I've been gathering up lately. And so one of the first things that I get from a lot of people who are thinking about moving to Florida and moving to this area, they basically tell me, I hear Florida's insurance is really high. So, do you have any kind of statistics about different parts of the country, maybe even Georgia versus Florida? What is it that you can tell me about insurance in the state of Florida as far as rate quotes go?
Well, when you're looking at purchasing a home in Florida, there's so many different factors that go into the rating. So if you have a 2024 built home that's 5 miles from the coast, I'm going to write you a homeowner's policy for $700 a year, even if we're insuring a dwelling for 300,000-400,000. New construction's the desirable sweet spot for the companies nowadays. So that in a turn makes it affordable. But if you're looking at a frame constructed home on the coast that was built in 1970, you're going to get whacked. You're looking at probably $5,000 for the same coverage as you would new construction. So really, the rating factors matter. How far to the coast? What's the construction type? How old's the roof? What's the age of construction? Is it a seasonal or secondary home? Is it primary? All of that taken into account is where we get our rating from. So realistically, there are some favorable rates in Florida, and there are some favorable pockets where these companies they want to insure. When you're looking at like a Georgia, you don't have hurricanes in Georgia. They don't have rampant roof fraud like we've had for the last 3 years in Florida. So those states are going to be fairly favorable. Now, if you throw it back to Texas or Louisiana or Mississippi, they're sitting right along Florida with crippling rates, same as us. So realistically, I would say there are some favorable prices to be had, but by and large, Florida is kind of 50% old homes and nowadays 50% newer constructed homes. So it's kind of a mixed bag.
So, wouldn't the mindset be, well, if that 1970 framed home is still standing after all these years and all these hurricanes that came through, that wouldn't be really something that insurance companies take into consideration?
Not really. I mean, they have actuaries that are working to come up with their rate structures and their territories. And, they're looking at the 100-year storm. Could it happen? Hasn't happened in 100 years, but it could happen. And, that's why they're charging you higher rates. That 1971 frame home, if you plop that thing right in the middle of Marion County, you're talking about 50% less than if you're purchasing in Manatee.
Right.
So, they're kind of looking at risk factor. Can it happen? Will it happen? What's the statistics on it? And that's where they're coming up with it. And realistically, more so than right now, than worrying about hurricanes, is they're worried about the fraud. I mean, we've just been. I never thought it would be worse than the sinkholes we faced in 2005 to 2008, but it's bad.
With
It's
the
really,
roofs.
yes. Hmm.
I agree. And I've been preaching that for a couple of years now. And exactly that. 10 years ago, we had all these scammers in sinkholes. I
Hmm.
was just explaining to somebody today. It used to be if somebody cut a tree down in a home and then 10 years later, all of a sudden you have a depression in that yard, those scamming sinkhole people would come out there and they go, "Oh yeah, this is the start of a sinkhole. We really got have to go and underpin your entire home around here," when it was simply a dead tree
Yep.
that just rotted out. So I'm on board with that. And then now all these roofing companies have actually gone out and hired salespeople to go door to door, knock on the doors. Hey, would you like a free roof? I mean, it's crazy. These people should be thrown in jail, a lot of them.
Oh, they're crooks. And I'm going to tell you that right now, so we've had a couple legislative sessions. The last one that we had, we're going to see some relief coming through. Not like, oh yeah, the rates are going back to, 10 years ago rates, but the insurance companies are now taking steps to combat this fraud. So they're giving discounts for
Good.
you signing mandatory mediation arbitration agreements, stating that if you have a claim and disagree with them, they will no longer pay your legal fees if you sue them. They will only pay their legal fees. We're no longer going to be doing assignment of benefits to roofing contractors. That's going to be eradicated. And also, they're going to roof surface schedules now with the companies. So if your room, let's say if your roof is 5 years and it's each year it goes after that, they're gonna do a sliding scale actual cash value replacement on your roofs. So that will help with the people that have the 22-year-old roofs that the whole entire neighborhood has hail damage, air quotes.
Right.
um, so now the companies are saying no, they're starting to fight back. So that is going to provide us some relief as the consumer, and we're going to start seeing less policies being canceled and rates starting to simmer down a little bit. They might not drop down a great bunch, but we're not going to see those high 30 to 60% rate increases each year. That's wonderful.
Yeah, that's good. I mean, I was the victim of a rate hike on my home,
Right.
um, unbeknownst to me, because I really didn't even know my insurance was going up, because all of my mortgage was, my PITI, the
Your escrow.
my taxes and insurance were all escrowed into my mortgage, and then when my mortgage went up, I was thinking, well, maybe it's an adjustable rate mortgage. That's why it's going up. And unbeknownst to me, I wasn't even given a notice that it was my homeowner's insurance that was going up. And it actually went from 3,500 like 4 years ago to 5,400, and it was 5,400 for a couple of years, and then last year it went to $9,700 for my homeowner's insurance. And it's like, wait a minute. I called my mortgage company and I said, what's the deal with this doubling of my mortgage payment. And they go, oh, that's your homeowner's insurance. So, that's why I'm so happy to be able to do this podcast and kind of let everybody know out there. Be very careful if you're paying taxes and insurance with your mortgage. Pay very close, attention to that mortgage rate. I mean, the homeowner's policy rate.
Well, not only that, but I'm going to give myself a shameless plug here. Um, if you have a really good agent, which that could be a funny statement to be making, but each year when my policyholders start renewing, I have a suspense set in my management account. So if your premium gets hit for more than 20%, it's going to hit my dashboard and I'm going to automatically shop it and reach out to you. So if you're getting a $2,000 in 1 year increase, you're not even going to have to call me. I'm going to pick up the phone and call you and say, hey, we have a problem here. So I would say one of the critical things is when you're talking to people is have an agent that you build a rapport with that's looking out for you. And you will get those renewals in the mail or emailed to you. And you should be able to pick up the phone and get on the phone with your agent right away. And they should move for you. And that's why it's great to have an independent agent that, has 30, 40 different companies, because you're not stuck with one company. I mean, you might get stuck with one company, but in the grand scheme of things, it's our job to look out for you and be providing the most favorable rates at all
And
times.
that's what I was expecting. I mean, I was with this insurance company. I tell you, it was Allstate. I've been with them over 20 years. I have my car insurance with them. I have my homeowner's insurance with them. And actually, well, the company that I was with sold out to another company. And that's when my rate kind of went up and unbeknownst to me, that I know of, I never got a notice. And then, like I said, all of a sudden, it jumped up $4,200 in 1 year, and it's like, this is just crazy. And when I called them up and I said, what's the deal? I'm firing you guys. I go, okay, well, we understand, but I tell you what, she says, I'm going to keep your name and I'm going to call you at the end of the year because I'm sure your rate's going to go back up again. And when it does, we're going to try to, call you and get your business back. I'm like, wait a minute. You're charging me $9,700. I got it for 2,700. So I'm saving myself $7,000. And you're telling me you're going to keep my name and you're going to call me and oh, you're gonna beat the 9,700 that you're charging me now? I mean, it just didn't make sense at all to me. It was just like, that's just crazy. So
I hear that a lot. Believe that. I get a lot of business
that's
that way.
I'll bet you do. And so we are looking for somebody that we can partner with, that we can refer people to. So I'm glad that you're on.
Yes.
And this was also after I had put a new roof on my house and I put a new air conditioner on my home. They're still jacking me up like that. We can kind of get away from that. So tell me a little bit about roofs now. So what is your company's position on, uh, I guess, age of roof and what you're looking for and what people can expect?
So outside of Citizens, which is a state-run insurance company of last resort, that's where we're putting you if no other carrier can take you on, or the premium is 20% more for matching coverage and deductible. Citizens has a lot of guidelines that are a little bit looser than some of the other standard markets that are providing coverage right now. So you can guarantee on an asphalt shingle roof, you're going to be topped out at 10 years. Most companies are not going to provide coverage for you if your asphalt shingle, composite shingle roof is over 10 years of age.
Really?
Mm-hmm.
I thought it was 15.
Nope. 10 years. Citizens will go up to 25. with favorable documentation of at least 5 years of remaining left on the roof with no deficiency. And that's not even a guarantee because once they look at those photos, if they think that roof is aged out, they will proceed to cancel. Um, so then you're looking at architectural shingle roofs. You've got 15 years on those.
Oh, so
Mhm.
what do you have the 10 years on? The 3
10 years is
tab?
going to be your 3 tab.
Gotcha. Okay.
Yeah, and you're going to get 15 on architectural shingle. Most companies right now are running 20 years on tile and 30 years for metal.
Gotcha. Okay. Yep. Well, that's in line with what I've been experiencing.
Uh-huh.
So, I mean, not many 3 tab shingles anymore. I mean, I don't know of any roofing companies, do you, that are replacing shingles with a 3 tab anymore? Well, I guess maybe 10 years ago they did. I can understand that.
A lot of the new construction we're seeing architectural shingle on,
Hmm.
um, but you know, it costs more for an architectural shingle roof, so I think it's kind of up to the consumer which one they're going to choose. When they come to your house and they throw all the shingles on the table and tell you this one costs this much and that one costs this much, with inflation right now, people are starting to, choose the cheaper option, unfortunately, in some cases. Um,
Hmm.
but and always too, if you're getting a new roof put on, right? And you've got like when I say older home, and this is gonna sound funny, but if you've got like a 1990 home and older, um, if you're putting a new roof on, ask the roofer how much it costs to install clips up in your rafters. Or if you have clips and only have 2 nails, how much is it to add the third while they're doing a new roof? Because that's gonna give you a pretty hefty discount. And if you're already putting a new roof on, it's cheaper to have the roofer do it than to go pay a company like Third Nail to come out there and install them for you.
Well, where are the clips?
They're gonna be up in the rafters. They're attaching the trusses. And they're silver clips, or you could have wraps which go around the trusses. But by and large, you're seeing clips, unless it's brand new construction, and that's going around the truss, and it's driven through with 2 nails, unless
That's a
it's
strap.
lower.
Those
Or
are
they
hurricane straps, right?
the straps or clips.
Because clips, I know I'm a contractor.
Oh boy.
So so I do have a contractor's license. I've built plenty of homes, and I know we put clips in between the sheathing.
Mhm.
But straps, I understand, come up off, either the frame or the block, and if it's new construction, they just stick the strap right into the the tie beam that they pour, and then they just wrap it around the tails of the truss, and you either have 1 strap or 2 straps that'll strap around the tails of the trusses. But so you're talking about straps,
Well, you're probably familiar with the wind mitigation inspections then. So there's
right?
levels of discounts. You either have toenails, you have clips, you have single wraps, or you have double wraps.
Well,
So
toenails would be in a wood frame construction with a wood header.
right, so that's typically what we see in like a 1960s or 70s home. You're always going
Yeah.
to have toenails. But
Hmm.
what we were running into a lot was there were clips present, but the insurance carriers want 3 nails driven through.
Gotcha.
And those only had 2 nails driven through. So now we see all these companies popping up, like Third Nail is one of the biggest ones in the state of Florida. They'll actually come in and drive that 3rd nail in so you can get the credit. So that's the
Gotcha.
different factor of clips. Either you have 2 or you have 3 nails. You need to have 3 to get the credit.
Okay. Well, I think we're also talking wood frame construction versus block construction too.
No, masonry construction.
So your third nail would be in the truss.
Right, because most of the concrete blocks homes are joisted masonry.
Hmm. Okay. All right. Yep, so I'm with you on that. Um, what about underlayment? Does that
It's
make
not
any
a huge
difference?
credit. Mm-mm.
You have, you have the peel and stick that there, and then the roofing companies are telling you that they're giving you a lifetime warranty on your roof because you have this peel and stick underlayment, and that's what's going to get you that lifetime warranty. So, is there anything as far as insurance companies go that where they would factor that in?
So when you get your wind mitigation inspection, that's going to be a credit factor on there and a question. If you have secondary water resistance, which is that underlayment, that barrier, you're probably looking at about an additional 8% credit on your policy. Um, some of the companies like Olympus, they require you to have secondary water resistance to issue a policy with them. Um, 90% of the wind mitigations I'm getting on new roofs that have been installed in the last year or two all have secondary water resistance.
And secondary water resistance, you are referring to
The
underlayment?
underlayment. Yeah.
Because all roofs, either it's tar paper or it's this membrane underlayment that they have now, or it's the peel and stick. Those are the three underlayments that I'm familiar with. And I didn't think that you could, you would pass inspection if you didn't have underlayments.
From what I understand from some of my roofing contractors, the secondary water resistance is an optional purchase for it's not required. So either you purchase it or you don't. But pretty much 90% of the wind mitigations, and I probably see 50 wind mitigations a month. And pretty much every single one of them has secondary water on the newer roofs that are being installed. But the credit is minimal, very small.
With my so I also have a home inspector license as well as my contractor's license. And so with wind mitigation, and whenever I only did one wind mitigation, by the way, when I had my when my homeowner's home inspector's license was active. So we watched nail patterns in the trusses from the sheathing, and
Mhm.
normally when you do a new roof, you put more nails into the sheathing, and so you look at that to see, and then you look at the straps like you were talking about, and how many nails are in the straps. But I don't know how a wind mitigation could really determine what's underneath those shingles once it's put on. You can't really, you're not going to pull any shingles off to see if you what's under there, right?
No, but if you have paperwork from when you had that roof installed 3 years ago showing that you paid extra to have that installed and you give it to your wind mit inspector, they can verify that and include it with the wind mitigation paperwork to give you the credit.
Gotcha. Cool. All right. I think we beat that subject
That
to
dead horse?
death. I want to talk about sinkholes. That's other people's concerns, especially in Florida. My understanding is sinkholes, all policies have catastrophic sinkhole coverage. Am I correct on that?
Yes, every homeowner's policy in the state of Florida is going to extend catastrophic ground collapse coverage. Now, that's when you see the big hole open, whoosh, underneath your house. There was a gentleman in Sumter, Florida, that was sleeping and fell through the floor. That's called a catastrophic ground collapse. When you're watching the news and you're coming here from out of state, and the news is the reporters on there saying, "Oh, there's a sinkhole over here," and they're showing the big hole. In the insurance world, we don't think that's a sinkhole. We're calling that a catastrophic ground collapse. That's sudden accidental whoosh. The depression opens, the hole opens. You're covered 100% with no deductible for that. Now, sinkhole, you're going to need an engineering report, a pre inspection, and that's for ground settlement. When your home is slowly starting to settle into the ground because there's a water tablet depression underneath the home that's causing it. They've made it legislatively in their guidelines so hard to prove that it's a sinkhole. Um, that anymore the house almost has to be condemned to get a sinkhole claim paid out. And you're looking at paying a 10% deductible of your dwelling value if they say it is a sinkhole. And you've been paying for that in addition to, it's like an endorsement on your policy. So if that engineering report comes back and says you have less than a 5% chance of ever having a sinkhole loss, the carriers will offer it to you for an additional premium, and that gives you peace of mind. But realistically, in the state of Florida, there's not really very many true sinkholes that we've come across, or that I've come across in 21 years.
So you call it a catastrophic
Ground collapse.
ground collapse.
Mm-hmm.
All right. Well, and so that's not considered a sinkhole.
Correct. And like I said, a lot of the terminology when you're watching the news and you see a big hole that's opened up and they keep calling it a sinkhole, in insurance minds, we call that a catastrophic ground collapse.
And so at that point, your coverage wouldn't pay for that?
Your coverage will pay for a catastrophic ground collapse with no deductible.
Okay. And then a lot of people ask me also, well, should I put a rider on there for what's it called? Lack of a minor sinkhole damage.
Well, the only rider you can get put on, which would be the sinkhole endorsement, and there's only a couple of companies that are offering that. You would have to get the pre-engineering inspection, and that gets uploaded to the carrier to manually review. And if they feel like it's a very low risk property, they will offer that coverage to it an additional cost.
Right. Yeah, that's what. Do you have any kind of sense of how much that costs?
It depends on the area. Yeah, it depends on the area, and it depends on the engineering report. And I don't really agree with that, because they're looking also at previous claims called in that area for a sinkhole. So if you have a zip code where every neighbor in 2007, called in a fraudulent sinkhole claim, you're going to pay much more for your sinkhole coverage than a guy that lives in a zip code where, there's never been really any fraudulent sinkhole claims called in. So certain counties are more prone, certain areas of Hillsborough, Pasco, Hernando. You might be looking at $500 to $1,000 a year just for the sinkhole endorsement.
Okay. All right. Well, that's very good information about that. Okay. What about flood? All right. So I tell people whenever you get homeowners insurance, you should always make sure that you have wind damage as a rider or built into your policy. Is that good advice?
Absolutely. So right now, every policy in Florida, you should be getting a special form policy, which is going to include perils: fire, lightning, theft, vandalism, pipe burst due to accidental discharge of water, wind, hail, and hurricane. That should all be on one policy for you. And that's why you want the wind mitigation, because that's going to help that rate stay down on the wind portion of premium on your policy. The water damage, just to kind of hit that real quick before I forget, a lot of companies right now are only offering $10,000 in pipe burst coverage. That's their maximum, especially if the home's over 20 years of age. Sometimes you can buy it back and sometimes you can't. Just like the roof claims, they've been taking a lot of hits on water damage claims. So most companies on older homes, 30 years and older, 20 years and older, are only offering $10,000 on water damage. Should you have the pipe burst.
Interesting.
Now, it's always going to exclude the perils of a sudden rising or rushing of water, like a tidal surge. And it has to be a community event. So 1, 2, 3 houses in a row all have 2 feet of water in their house. You needed a flood policy. Your homeowners is not extending to that. If your water heater blows up and causes 3 feet of water in your house, covered by your homeowners. But if you have a sudden rising and it rushes into your home, you need a flood insurance policy. So you're going to either be in a low to moderate risk zone or you're going to be in a high zone, like an AE or a BE. That's where you're paying thousands of dollars for flood insurance. Um, there's some circumstances where if I, as your agent, am reviewing to offer you a home policy, I am looking at where your home's located. And even if it comes back as a low to moderate, if I feel like there's a heavy threat there, I am going to offer you a low to moderate flood policy for maybe $500 a year just to protect you from that peril as well. Flood is always going to be a separate policy.
So flood is takes into consideration either an outside event of floodwaters coming into your home or a pipe bursting. That's still the same
No,
coverage.
no, a pipe burst is going to be covered under your home policy. So if you have a 2-story home and the upstairs bathroom pipe bursts and it rains water all the way down to first level, that's your
Mhm.
homeowner's insurance.
And is that the $10,000 cap?
On most carriers, yes.
Wow.
Mhm. Now,
Wow.
Citizens offers full water. You have companies like Frontline that are still offering full water damage. If it's new construction, most companies aren't limiting water damage, but you can bet anything that's built 30 years ago, they're going to limit your water damage. But really, you're going to Citizens anyway, as much as that hurts my feelings.
Well, I've known some, I have known, I mean, I've been in the business 24 years. I've known some people who have had a pipe burst and they've had to have their cabinets replaced because their cabinets were, builder grade particle board cabinets and their flooring needed to be all replaced. That's going to be way over $10,000 to
Way
have.
over.
Yeah.
Yeah.
So there's no way to circumvent that kind of that cost or damage.
No, not there's no supplemental policy you can buy, but now I've got quite a few people that, I get a 4-point insurance inspection back. Home was built in 65, but completely repiped in 2022. And then it's not so horrible to only get the 10,000 limitation because the whole house has been repiped. So your
Hmm.
risk is way lower than somebody that's coming in with original piping in the
There's
house.
a community called Del Webb Spruce Creek locally that many of the homes have had to be repiped. And I don't know if it's because they were using polybutylene or PEX piping that has been recalled in the past, but they've had to actually repipe over the ceiling and down for their water supplies. So that's kind of something like what you're talking about.
Yeah. Well, and if you've got polybutylene in your home, you better go replace it because pretty much every carrier that's a no-no. Citizens will take it if it's 20 years and newer, but in the last 20 years, nobody's really using polybutylene. Some carriers won't touch galvanized. Some of them won't touch cast iron coming out from the house. That can pose a potential problem. And some carriers, PEX, they want to see it 2002 and newer, which is pretty much what you see PEX with. But polybutylene, you're in trouble. That's the worst ever. And also, pretty much every single carrier outside of Citizens, that water heater cannot be over 14 years of age. They will make you replace it before giving you the coverage.
Interesting. Now, I mean, all the well, I would say 90% of the water heaters I'm familiar with are out in the garage.
Correct.
Where if something was to break or bust or the bottom rot out and water infiltrates, it's in the garage and then the garage is sloped and it goes out. So do they take that into consideration of where the water heater is placed?
No, not at all, because they have to file legislatively for their underwriting guidelines. So you might have yours in the garage, but the neighbor next door might have his in the utility closet inside. So they can't make, say, oh, okay, you're okay, but you're not. They have to do it as a blanket.
Okay.
Yeah.
Yeah, I mean, I know that's recently been brought to my attention are the roofs, and then now roofs, architectural roofs, like you said, within 15 years, and I didn't know what the cutoff was for water heaters.
Yeah,
So
pretty much
that's
14 years is what you're
okay.
looking on.
All right, I made note of that. That's good to know. Let's see here.
And one thing I just want to throw out there about flood, because I'm running into this a lot. I deal with a lot of realtors and lenders. If you are coming new to Florida and you are buying a home that is in a high risk flood zone, you need to make sure your realtor asks to obtain a copy of the seller's current National Flood Insurance Program declaration proof. Because since FEMA rolled out the Rating 2.0 system in October of last year, we can provide assumable rates based on what the current owner has. So you could be looking at, I'm quoting you $5,000 for flood, but I go in there and I put in that owner's current information. Now you're looking at a $2,000 flood policy because I'm assuming their rates. Back in the old days, we used to have you do an assumption where you'd take over their flood policy in the middle of their time period when you're doing a new purchase. We don't have to do that anymore. And it's critically important that we get that because the flood rates are extremely high right now.
Well, I know where I'm located in the villages are getting into an area of their new construction where there's a lot of flood zone. And I see some of the houses even kind of cross over into the flood zone area. And so I would think that they're going to require flood insurance if that happens, right?
Yeah. Yeah. I mean, really, flood insurance is required if you have a lender, if you have a loan. If you buy your home cash and you don't want to put flood on it, you don't have to. Um, but you got to look at the cost and weigh the risk factor. If you're in a high risk area and your new construction and your flood premium's 500 a year, why wouldn't you buy it?
Right.
You know,
Yeah.
and a lot of these companies nowadays are offering flood as an endorsement, and it's a lot cheaper than going, to the National Flood Insurance Program companies or even the private markets. I'm always running down. I've got 8 different private markets for flood, and then I've got the NFIP. You just never know who's going to come out best. Sometimes private market comes out best. Yeah.
Okay. Well, that's also good to know. Um, well, is there anything else that you feel like, we need that I didn't ask and that we probably need to share with our people who are watching this podcast?
No, just to recap, there is some relief coming. So everybody just hold tight. I mean, it's not going to be a huge reduction in pricing, but we might kind of flatline, which would be good. Um,
Right.
you know, and just have a good relationship with your agent. Be with one that's an independent. You know, you got to have options and choices in life, and you have to have an agent that can offer you multiple lines of business: flood, home, auto, boats, RVs, comprehensive liability. And be with somebody that understands the rate structures and what's going on in Florida right now to be workable to provide you the proper coverage to protect your asset based on your specific needs, not on just, oh, here's a quote, take it. Fine tune
Right.
it. Talk about it. If you're 21 years old and you're buying your first house, do you need $100,000 in contents? I know at 21 I didn't. No. So why would you pay extra money for that? You know,
Right.
don't go with these agents that are putting all these little endorsements on there and just, oh yeah, this is it. This is the only thing you can get. Maybe not. you know? So buyer beware. That's what I say. Buyer beware.
In your office, do you shop around rates with different underwriters?
Yes, not only do I have over 30 standard companies I can quote directly with, but I've also got 6 brokers I work with. For surplus lines, high value, harder to place risks. Maybe you have cross wiring. Maybe you've got polybutylene, which nobody will take, so don't even listen to that. But we have all those homeowners carriers, and then I've got all the private market flood, the NFIP flood. I've got 14 different auto carriers. I've got 6 different watercraft carriers. So look at the options. Always get your best rates. Don't overpay for insurance. It's ridiculous.
Well, that's good news about, how help is coming.
Yeah.
So at least I won't, hopefully I'll never have to experience that rate hike. Uh, one last thing that did come to mind. What about manufactured homes? Do you cover manufactured homes?
Yes, we can write manufactured home. Ugh. Riley Elliott in my office is the expert with those. um,
Okay.
but new construction, mobile homes, anything that's basically 2000 and newer. We do have a couple different markets for that will give you replacement cost on the dwelling. Most times you're getting a loan and the lender's requiring that. Anything that's older than 20 years old, you're pretty much going citizens, which is actual cash value, or you're going surplus lines, which means you're paying $4,000 for 70,000 in coverage on a mobile. The
Wow.
mobiles are tough. The mobiles are
Yeah.
really tough.
Okay. Well, that's good to know as well. In 2000, anything older than
Pretty much.
2000? Because I know it used to be like 1976 or newer for mortgages, and I figured that was going to factor in with homeowners as well. But that's those days are gone, huh?
Yeah, pretty much. I mean, it went to like 1998 and newer, then it dropped to 1996 and newer. And now it's just, and the carriers, I just got a memo that American Mobile Exchange is canceling every policy in the state of Florida. Um,
Wow.
so like we're running out of options. They don't want them. They just don't want them.
Yeah. No, I get it. All right, David, I appreciate your time today. We're going to go ahead and give everybody her contact information right now.
Yes.
So we're gonna put that up on the screen. If you wanna give us your phone number.
Yeah. So anybody that wants, or even if you have a question, or if you need me to review your current policy, I don't care if I get your business or not, really. Um, I'm more of like an educator. I went to college for that. Um,
Nice.
you can call me directly. That rings to my desk, which is 352-358-3568. Or you can email me, and that's my first name, which is Deva, and that's spelled D like David, E like Edward, V like Victor, A like Apple, at M like Mary, Y like Yellow, F like Florida, B like Boy, Q like Quote.com. Either way, they'll
Excellent. I'm sure you will be getting a lot of calls and emails from people who have some other questions that I might have forgot to
Gosh, I
ask. I,
hope
I
so.
think we, yeah, I think we pretty much covered it all though today. So I want to thank you again. I
Yes.
really appreciate it. And I'm sure that you'll be getting a lot of calls from this podcast.
Gosh, I hope so. And if you ever would like me to come back on and chit chat again, I really enjoy to talk about insurance. Otherwise, I wouldn't have been doing it 21 years.
That's awesome. I appreciate it. I'm sure we will have you back on.
Great. Thanks, Ira. You guys have a
Okay,
great
Deva.
day.
Thank you so much. I appreciate it. You have a wonderful day yourself.
You too. Take care now.
Okay, bye bye.
Bye-bye.
All right, everybody. So there you go. You have Deva's contact information. You can contact her directly if you'd like, if you have any other questions that I might have forgot to ask her. And I'm hoping that you got a lot out of this. I know I did. I wrote all kind of notes down here, and I'm probably going to be reviewing my own podcast here, just so I can keep providing updated information. All this was really, really good information. I've been trying to get a homeowner's insurance specialist on one of my live streams, so other people can always ask questions and in real time. And I'll probably reach out to Deva at some point, and maybe we can do another. I'll get with Christian. Maybe we can do a Zoom call with her during our live stream where everybody can ask questions. So I want to thank everybody for watching the podcast today. Like I said, I hope you all got a lot out of it. We're going to keep them coming. We're going to bring not only customers and testimonials to you, but great information like we just heard from Deva. We also have a mortgage person that we're going to be bringing on and have a podcast with mortgage person as well. And if you have any specific mortgage questions that you'd like me to ask, please go ahead and email me at ira@imrealty.org. Same with insurance. If you have any other insurance questions, like I said, I really want to try to bring Deva back onto one of our live streams so everybody can talk to her and ask her questions in real time. So thanks so much again for watching, and I look forward to seeing you in our next podcast. Take care.